Hello everyone, warm welcome to Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session. We call it as Finance Current Affairs. So in this particular session, we will be discussing the Finance Current Affairs for 7th to 9th of June, and I can assure you this session is going to be really very important for you if you're preparing for RBI Grade B examination or any other regulatory body exam. So before we start the discussion, may I have a reply in the comment section? Yes sir, yes sir, yes sir. If I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. So just give me yes sir if I'm audible, visible, everything is fine, so that we can begin the discussion without any further delay. Quickly everyone. Okay, thank you so much. So as per the suggestions, as per the feedbacks given in the previous session, I have included all your suggestions, all your feedbacks in this particular session itself, and I'm pretty sure that you're going to enjoy it. Be with me till the end of this video because I have a very important announcement to make by the end of this video. Okay, so today I have three important news for you, out of which the first news is the most important news, which is related to microfinance institutes. Now, if you want to download the PDF of this session, the PDF of this session will be available on my Telegram channel. You can just scan the code. My handle is @Madhav, or you can even type Economics by Madhav to join this Telegram channel in order to download the PDF of this particular session. As promised, I will be sharing the PDF of this session right after completing my video. That means this PDF will be available to you in next 15 to 20 minutes. I assure you that. ठीक है जी, चलो तो आओ जरा बिना किसी देरी के आज के सेशन की शुरुआत करते हैं। तो आज का जो हमारा पहला पॉइंट है, फ्रॉम वेयर आई एम गोइंग टू स्टार्ट माय डिस्कशन, दैट इज द मास्टर डायरेक्शन रिलेटेड टू माइक्रो फाइनेंस। मास्टर डायरेक्शन रिलेटेड टू माइक्रो फाइनेंस। इस पूरी की पूरी स्टोरी को समझने से पहले, इस पूरी की पूरी डायरेक्शन को समझने से पहले, आई वुड लाइक टू make few discussions with you as I always do. So let's discuss that way. First of all, my first point for everyone is, guys, first of all, we all know that what is microfinance. I hope you all are very well aware how we define a word microfinance. Anyone can give me the answer? Anyone can give me the answer? And this microfinance, or I would say the lending under the category of microfinance, can be done by the banks. It can even be done by the NBFCs, and even we have specialized NBFCs which are operating with the sole motive, of providing loans to microfinance category only, and we call them as microfinance institutes. Now, the answer to my first question is, sir, how you define a microfinance loan or microfinance lending? So whenever we talk about the microfinance loan, it basically means lending done to the household with yearly income up to 3 lakh rupees. So if there is a household with yearly income up to 3 lakh rupees is eligible to obtain the loan under the category of microfinance loan. So this loan will be termed as, or any loan will be termed as microfinance loan if lending is done to the household with yearly income or with annual income of 3 lakh rupees plus the loan is given, that is, or the collateral free loan is given. I hope you understand what is collateral free loan. Collateral free loan basically means without security loan, which basically means without security loan. Whenever you provide loan without any security, that means you are providing the loan without any asset given as mortgage in order to recover the loan in the near future. Now, the question over here is, sir, what is the revision done by RBI? Have RBI revised the entire regulation related to microfinance loans? No, sir, there is a very minute, I repeat, there is a very minute update related to the microfinance institutes, but this very minute update related to the Microfinance Institute has added the importance that yes, there could be a question related to microfinance institutes in the upcoming examination. So keeping that in mind, I have come up with this particular news. I hope guys you all are ready. I hope guys you all are ready. So if you all are ready and you want me to start with the discussion, just give me yes sir, so that we can begin the discussion without any further delay. So first of all, RBI has made certain changes or certain revisions related to the microfinance institutes. Now the question is, under which act or under which law RBI has this power? Then my answer to this particular question is, whenever a new regulation is formulated by RBI, the first rule, as we have studied under the context, is whenever RBI comes up with a regulation amendment, then RBI should come up with the acts, the sections which provide powers to RBI in order to make these certain changes. So according to the powers given to RBI as per section 21, section 35, section 56 of Banking Regulation Act 1949. So first act which is important, sections you can ignore, that is Banking Regulation Act 1949. Second is NBFCs are regulated by RBI as per RBI Act 1934. Banks are regulated by RBI under Banking Regulation Act 1949, and the National House and the housing finance companies are regulated as per National Housing Bank Act 1987. So the powers given to RBI under these three acts make RBI capable to review as well as to amend certain rules and regulations related to banks, NBFCs as well as housing finance companies, which we can collectively refer it as regulated entities, and I will be referring this term regulated entities again and again in my discussion. Got it? Moving on to the second point. The second point is, so these framework, the microfinance loan regulatory framework, this was amended back in 2022, then it was revised in 2024, and now recently it has been reviewed and revised in May 2025. The question over here is, so these rules and regulations are applicable on which all institutes? Then my answer to this particular question is, so these are applicable on all those institutes which are regulated by RBI, as well as they are eligible to give or to provide microfinance loans. So it includes none other than banks, it includes NBFCs, as well as it includes the special category of NBFC, that is housing finance company. So in case of banks, obviously it includes all the commercial banks as well as it include the cooperative banks, which include urban cooperative bank, state cooperative bank, central or district cooperative bank, and even it include all the NBFCs, which include special microfinance institutes, as well as it include the housing finance companies as well. तो यहाँ पे एक पॉइंट आप बहुत क्लियरली समझ लीजिए जो कहीं ना कहीं आपको कंफ्यूज करेगा. आफ्टर few minutes, the moment I'll move ahead, the point which is going to confuse you वो ये है कि सर ये माइक्रो फाइनेंस लोन कौन प्रोवाइड कर सकता है. सो माय आंसर टू दिस पर्टिकुलर क्वेश्चन इज an entity, please pay attention, an entity which provides loan to the household with annual income up to 3 lakh rupees per annum plus लोन विच इज प्रोवाइडेड, इट इज कोलैटरल फ्री. कोलैटरल फ्री का मतलब बिना सिक्योरिटी के लोन जब दिया जाए. दिस टाइप ऑफ लोन इज नोन एज व्हाट? सर इस लोन को हम क्या कहेंगे? विल कॉल इट एज माइक्रो फाइनेंस लोन. पॉइंट समझ आया? ये लोन क्या कहलाएगा? सर दिस लोन विल बी टर्म्ड एज माइक्रो फाइनेंस लोन. बट who all can provide this microfinance loan? So microfinance loan can be provided by scheduled commercial banks, it can be provided by cooperative banks, and even this can be provided by NBFCs. So we have different types of NBFCs. We have deposit taking NBFCs, we have non-deposit taking NBFCs, but along with or in the category of NBFCs, I would say we have special NBFCs which are involved only and only in microfinance loan. We call them as microfinance institutes. Then we have housing finance companies which provide loan for purchase of house. We call them as housing finance companies, as well as other NBFCs. Is this point clear? Is this point clear? So scheduled commercial banks, cooperative banks, even Muthoot Finance can provide loan under microfinance category, but we have special institutes as well, which are known as microfinance institutes or NBFCs, which are termed as microfinance institutes, which are responsible, or their core operation is to provide loan to the microfinance category only. Clear hua ye point? Clear hua ye point? If it is clear, just give me yes sir. Tanya, there is no need to remember the sections, but if you are remembering the act, that is more than sufficient. और ये remember करना भी कुछ ज़्यादा tough नहीं है Tina, because RBI is regulating the banks under Banking Regulation Act. RBI is regulating the NBFCs under its own act, RBI Act 1934, and the housing finance companies, they are operated as per housing finance, as per the National Housing Bank Act 1987. बस इतनी ही तो बात है. This is what you need to remember. This is what you need to keep in your mind. समझ आ गई बात? Now, applicability. If I talk about the applicability, so these rules and regulations which we are going to discuss, they are applicable on all the commercial banks, that is small finance banks, local area banks, regional rural banks, even we have public sector banks, private banks, foreign banks, excluding payment bank. Why? Payment banks are excluded. So payment banks that do not provide loan, so there is no point talking about payment banks in the discussion that is lending. Second point is all the primary or urban cooperative banks, state cooperative banks, district or central cooperative banks, they all are included, or this law, this regulation is applicable on them, as well as it is applicable on all the NBFCs which include microfinance institutes as well as housing finance companies, Now, my second point, the second point is, as per this rules and regulations, the second point is how we define microfinance institute. So microfinance loan is what? So microfinance loan is a loan, or it is defined as a collateral free loan given to the household having annual income up to 3 lakh rupees. For this purpose, household shall mean an individual, family. So what is household? So household basically includes an individual family which include father, mother or husband, wife and their unmarried children. The moment child is married, then the child family will be treated different, father family will be treated different. Regulated entities, they shall have a board approved policy to provide flexibility of repayment periodicity as per borrower requirement. This is very important. What does it say? It says that regulated entities, they can provide flexibility of repayment periodicity, that how the microfinance borrowers are going to make the repayment. So there is a flexibility announced, and this flexibility is pre-approved by the board of the regulated entity, and as per the approval, ये जो flexibility है, that can be provided to the borrower. Clear? That can be provided to the borrower. Clear? Moving on to the next point. Now the next point says, sir, you are saying that the household income should be up to 3 lakh rupees. But the question is, how bank identifies the household income that it is 3 lakhs? क्योंकि उसका reason क्या है कि अगर household include a salaried employee, तो salaried employee के केस में तो the company is involved, the employer is involved, the employer is maybe deducting the TDS, or employer is maybe depositing the provident fund. तो वहां से कहीं ना कहीं it will be easy to identify the household income. But the families which we are talking, household income up to 3 lakh rupees, it's really very tough for the banks to identify that whether the family which is sitting in front of me looking forward for microfinance loan, and that too without collateral, whether they are eligible under this category or not. So the question is how the assessment of household income is done. So how the assessment of household income is done? The first point, every regulated entity shall put in place board approved policy for the assessment of household income, which means every regulated entity they must put in place board approved मतलब समझ रहे हैं ना कि जो आपके regulated entity है, बैंक है, एनबीएफसी है, उसके जो बोर्ड ऑफ डायरेक्टर्स है उनके द्वारा अप्रूव की गई एक पॉलिसी, the policy which has been approved by the board of directors of the regulated entity for the assessment of household income. ये है आपका पहला तरीका, ऐसा हो सकता है. Second could be self-regulatory organizations and other associations or agency, they may also develop a common framework based on the indicative methodology. So the SROs or the other associations, they have developed what? A common framework on the indicative methodology. Indicative methodology का मतलब क्या होता है? That you are not checking the exact income of the household, rather you judge the income of the household with certain factors. For example, जैसे हम कहते हैं ना कि यार इनके पास पैसा है या नहीं. How you make this judgment? You make this judgment with the help of what is the size of their house, what is the location of their house, what kind of four-wheelers they are using. For example, one of my friend, he has 3 4-wheelers at his place. One is BMW, other one is Audi, and the third one is, let's say, Volvo. So what we will say, we will consider that yes, he is a rich person, but we don't know his actual balance sheet, we don't know his actual reserves, we don't know his actual profit and loss statements, but we still give him a title that yes, he is a rich person. This is known as indicative methodology. So that indicative methodology is also used in order to assess that whether this household will come in the category of up to 3 lakh rupees per annum income or not. Third point is, each regulated entity shall mandatorily submit information regarding the household income to the credit information company. Now, for example, a household comes to me, I am a bank, to borrow a loan, and they say our household income is 2.5 lakh rupees. I say okay, I trust you. Now, the moment I say I trust you, I have shared the entire information of this household income or this household borrower with the credit information company. Now, this credit information company will firstly keep the record of this particular household borrower's income. Now let's suppose this is the first loan borrowed by this household. Now maybe after few months, the same household approaches to some other bank in order to borrow the loan under the same microfinance loan category, and at that particular moment they have reported the bank that our yearly income is, let's say, 2,80,000 rupees. Now this bank will also share the information, or this bank will also update the information with the credit information company. Now credit information company will say, wait, let me check, because I have data corresponding to this household. So the moment credit information company match the previous data with the current data, and if there is any kind of divergence, if there is any kind of difference, then in that particular case bank will be informed and bank will question the household borrower कि भैया पिछली बार जब आपने लोन लिया था तब तो आपने कहा था कि आपकी इनकम 2.5 लाख है, आज 4 महीने बाद आप बोल रहे हो कि आपकी इनकम 2,80,000 है, कैसे? तो in that particular case borrower will give the required explanation. If that explanation is okay, fine, then the lending will be done. Otherwise bank can reject making the loan on the basis of information which has been updated from CIC. Is this point clear? Say yes or no. तो पहली बात क्या है कि सर एक तरह से ये भी एक तरीका है. This is also a method to identify that whether the borrower is coming up with the right information or not, and this is how, or this information can be rechecked, or this information can be cross-checked with the help of CICs, and this is possible only if the regulated entity shall update the information on regular basis. अगर आपके पहले बैंक ने ये इंफॉर्मेशन अपडेट नहीं की होती तो सेकंड बैंक वुड हैव नेवर बीन एबल टू मेक दिस कंपैरिजन. सो फर्स्ट बैंक इज लायबल टू update the information, and the next or after the first loan, in the succeeding loans, every time the comparison can be very easily done with the help of data which is stored in CIC. Done, guys? Clear? Shall I move ahead? Okay. Now, I would like to discuss this indicative methodology. Are you interested, guys? Are you all interested? कभी सोचा है कि कैसे दूर से देखकर बैंक या फाइनेंशियल इंस्टीट्यूट्स ये जज करते हैं कि व्हाट इज योर ईयरली इनकम? हैव यू एवर गिवन अ थॉट? हैव यू एवर गिवन अ थॉट? इफ नो, then I will be giving you the method in this session itself. But remember, whatever information I'm going to share in next 3 slides, that is only and only required for, I would say, reading reference. That should not be remembered, that should not be memorized, because no question can be asked from that assessment methodology or indicative methodology. So as per the indicative methodology, what is done? So in case of indicative methodology, for understanding the income assessment of low income household, information related to the following parameters are captured. So parameters for which the information is captured, that is composition of the household, number of earning members, number of non-earning members. Second is type of accommodation. Are you living in a rented house or you are living in an owned house? Then availability of basic amenities. Do you have the availability of electricity, water, toilet, sewage, LPG connection? Availability of other assets, like do you have land, livestock, vehicle, furniture, smartphone, electronic items? So this is how we assess the household. After you assess the household, now you try to capture the income. So primary source of income is identified. So how you identify the primary source of income? For example, the household, the individual sits in front of the bank and says that, sir, I work in a company X and Y. So first of all, bank will identify the sector of work, whether it is agriculture, manufacturing, or service. Second is nature of work, whether you are self-employed or salaried, regular or seasonal worker. Frequency of income, whether you are earning on daily basis, weekly basis, monthly basis. Months or days of employment over the last 1 year. That means out of last 1 year, 365 days, for how many days or months you were employed. Self-reported monthly income and average monthly income, which has been derived with the help of all these datas. Is it clear? Is it clear? So these are the methods which are used. Along with this, the second assessment is done regarding the remittances. If you are receiving any kind of remittance, for example, the household has father, mother, 2 sons. One son is living with the father, other son is living outside in a metro city, maybe in Delhi, and this son is sending the funds to the father on regular basis. So that will be the part of remittance. If they have any land and they are earning rent on it, if they are receiving pension, if they are receiving any government transfer, scholarship, and other details required. So these are the guys parameters with the help of which income criteria, with the help of which bank basically identifies that whether the borrower is correct on his demand of loan under the microfinance lending or not. Along with that, bank also check your expense, which include the regular monthly expense such as food, utility, transport, house or shop rent, clothing, regular medical cost, college or school fees, etc. And even it includes the irregular expenses over the last year, so that bank should have an idea what is your income, what is your expense, whether you will be able to pay back the loan or not. And even bank will assess that yes, you are the one who is eligible under the microfinance lending because your yearly income is up to 3 lakh rupees. Got it, guys? So first point was what? First is under which act RBI get this power to revise the rules and regulations related to microfinance loan. These rules and regulations are applicable on which all parties, how we define microfinance loan, and how the assessment of household income is done. Moving on to the fifth point. Now, what does the fifth point say? So the fifth point says limit on loan repayment obligation of a household. So what does it mean? It means that if a borrower reaches to a regulated entity in order to borrow a loan, and if the lending is microfinance lending, then in that case there are certain restrictions. What are the restrictions? So the first restriction is limit of, what is the limit? Maximum 50% of the monthly household income. So what will be your EMI? So your EMI should be your equated monthly installment, or your monthly repayment of loan should be maximum 50% of your monthly household income. This is the case if only one loan is borrowed. But let's suppose the household has borrowed multiple loans, few loans in the category of microfinance loan, few loans have been borrowed with collateral, then also the condition is still going to remain the same. The condition says total repayment of loan. Total repayment of loan should be less than or equal to 50% of household monthly income. Are you getting my point? So for one loan, repayment limit is 50%, and for all the loans, repayment limit is still the same, that is 50%. So now it depends on the borrower whether it has one or more than one loan running on that particular household. Is this point clear? If it is clear, just give me yes, sir. So each regulated entity, they have a board approved policy regarding a limit on the outflow on account of repayment of monthly loan obligation of a household as a percentage of monthly household income, but there is a limit. So this 50% can be 30, can be 40, can be 45. From bank to bank it may vary, but it cannot go above 50% because this 50% criteria has been fixed by RBI. This 50% criteria has been fixed by RBI, where it says that your monthly loan repayment for a household with income up to 3 lakh rupees per annum should not be more than 50% of the household monthly income, including new loan to be borrowed plus existing loan, including without collateral as well as with collateral loans, including both without collateral as well as with collateral loans. Got it, guys? Clear? Ciao. Moving on to the next point. The next point is pricing of loan, means how lending rate by the regulated entity is decided, which means how banks, NBFCs, or maybe housing finance companies, they decide the lending rate on microfinance loans. So each regulated entity shall put in a board approved policy regarding the pricing of microfinance loan, which cover the following criteria. First one, a well-defined, a well-documented interest rate approach for arriving at all inclusive interest rates, which means you should present a well-documented interest rate approach कि भैया ये अगर interest rate होगा, this is going to be the repayment which is ought to be done by the borrower. Even the components of the interest rate, that means if you are earning the interest rate on a loan, this interest rate will include what all things? What is interest rate? So this is selling price, है? This is selling price. What is interest rate? Here I'm talking about in this manner. Let's suppose, guys, this is a bank. bank is providing loan under the category of microfinance loan. Now bank has to decide the lending rate. This lending rate will depend on what? So this lending rate will depend on cost of deposit. Say yes or no. Lending rate will for sure depend on cost of deposit, that is cost of funds. Along with cost of deposit or cost of funds, we will add risk premium. Why risk premium? Because this is a collateral free loan. You are giving the loan without collateral, and obviously it is risky. If in near future the loan repayment is not done, then you have no collateral to recover your loan. So risk premium is added. Along with risk premium, then bank or financial institute will add the margin. So once we add all of them, then we obtain the value of lending rate. If you ask me how the lending rate is calculated, then I will go in this manner. See, lending rate will be calculated as cost of funds plus operational expense plus risk premium plus negative carry on CRR. It can be a part of operational expense also, then plus margin. So on this particular basis, the final calculation is done and the lending rate is obtained. Now the lending rate is not only calculated, every bank as well as NBFCs, they are asked by RBI, they are ordered by RBI that you should publish this microfinance loan lending rate in your branches, in your offices, as well as on your website, as well as if you are printing any kind of pamphlet or any kind of other advertisement document, then on that particular advertisement document also contain the rate of interest which you are going to charge on microfinance loans, Got it, guys? So a well-defined, a well-documented interest rate approach, components of the interest rate, that is cost of funds, risk premium, margin, the range of spread of each component for a given category of borrower. That means what is the range of spread? Spread basically means, spread in this case can be treated in this manner. The word spread can be taken in this manner that let's suppose bank has decided the lending rate for microfinance loan is 10% and bank has given a spread of 1%, which means if borrower fulfill the bank criterias, bank is even ready to provide loan at 9, but if bank feels that it is highly risky, then in that particular case bank may even charge 11%. So there could be a spread range if required, which can be used for different categories of loan depending upon the risk. A ceiling on the interest rate and all other charges applicable to the microfinance loan. So there is a ceiling as it is applicable on all the different types of lending. So ceiling is applicable on the microfinance loan as well. Now there are certain important points which you need to remember. The first important point is there shall be no prepayment penalty on microfinance loans. Prepayment penalty means if you want to close your account before time period and you make prepayments whether to close the account or maybe your EMI is due after 3 days, but you are making the payment for your EMI 2 days before, then in that particular case also no penalty will be charged. So prepayment is not charged with any kind of penalty, whether the prepayment is done to close down the loan or maybe the prepayment is done to complete the loan before tenor. In that particular case no penalty will be charged, but penalty will be charged if there is a delay in payment. So if you are delaying the payment and you're not making the repayment as per the loan agreement, then in that particular case obviously bank has the power, regulated entity has a power to charge the penalty. The next important point is each regulated entity, as I said, should prominently display minimum, maximum as well as average interest rate. As I said, 9 to 11%. So they will say minimum 9, maximum 11, average rate of interest 10% per annum will be charged by banks on microfinance loans, and this should be displayed in all the offices, in all the information booklets, pamphlets, as well as it should be displayed on the websites. Any change in the interest rate or any other charge shall be informed to the borrower well in advance. So if you are making any change in the interest rate or you are adding any extra charges on the borrower, then you need to approve or you need to inform the borrower in advance. Last but not the least is self-regulatory organizations and other industry associations. They must publish the range of interest rate on microfinance loan which is charged by their members. Now in this particular case, SRO, they come up with a range that in our district, the range of microfinance lending loan rate or lending rate is 9.5 to 10.5%. Now I am a borrower. I will decide that my bank is giving me a loan at 10% per annum. Is it appropriate? I would say yes, it is within the range. And if my bank is offering me the loan at 9%, I will be happy. I am even able to borrow the loan below the average range. But if they are charging me 11%, then I should look out for some other option, because the rate of interest or the lending rate charge on me is above the average rate, and this average is published by self-regulatory organization for the given district. Self-regulatory organization for the given district. Got it, guys? Clear हो गया? चलो अगला point. This point we have discussed n number of times earlier. What do you understand by the word KFS? KFS stands for what, sir? It is K fact statement. Key fact statement basically means it's a document. It's a document which include, all the information, regarding the loan which you have borrowed, So this key fact statement is offered at the time when bank and customer, they have finalized the borrowing format. What I'm trying to say, key fact statement is the statement of key facts of loan agreement in simple and easier to understand language, provided to the borrower in a standardized format. So moment this individual reaches to the bank, once the bank is convinced that okay, I'm ready to give you the loan, once everything is finalized, then in that particular case, bank will issue key fact statement to the borrower. Now it is up to the borrower, that borrower is ready to borrow the loan, but borrower still has a power to reject that I don't want to borrow the loan. So in that particular case, KFS statement which is given to the borrower, it is valid for 3 days. If loan tenor is greater than 7 days. But if loan tenor is less than 7 days, that means you are borrowing loan for less than 7 days, in that particular case, this KFS will be valid for 1 day only. Now let's suppose today I reach to the bank, we have made all the discussions. Once all the discussions have been done, then bank give me this KFS. I said, okay, let me discuss it with my family members, and then bank, I'll let you know. Bank will say, it's up to you. It is valid for 3 days. If you'll come after 3 days, the facts, the statement, the points which is written on this can change. But if you come back in 3 days and you are ready to borrow the loan, then I will be providing you the loan on all the same conditions. Our loan agreement will include all the same conditions which are mentioned on this key fact statement. But there are certain conditions. The certain conditions are, the regulated entity shall provide this key fact statement to the borrower to help them to take an informed decision before implementing, before signing, before providing the loan, before signing the loan agreement. KFS should be written in language which is understood by the borrower. Content of KFS should be explained to the borrower, and acknowledgement shall be obtained that yes, you have understood whatever is written on this particular statement. KFS shall be provided with a unique proposal number and shall have a validity of at least 3 days or 1 day for a loan having tenure of 7 days or more and less than 7 days as mentioned on the screen. KFS shall also include a computation sheet of APR. What is this APR? Annual percentage rate and amortization schedule of loan over the loan tenure. I hope you all are very well aware. I hope you all are very well aware what is APR, but still I'll make you understand APR. Last point over here is, if any fees or charges which are not mentioned on KFS, those charges cannot be charged by regulated entity once the loan is given, even in the near future. तो जो लिखना है अभी लिख दो, जो charges लिखे होंगे KFS पे मैं वही पे करूंगा as a borrower. I will not pay any extra charge as per the conditions which are mentioned. We call it as key fact statement. But what is APR? So it is annual percentage rate. It is the annual cost of credit to the borrower, which include interest rate and all other charges. So if someone asks me what is annual percentage rate, so it includes interest rate plus all other charges which a borrower is supposed to pay. For example, interest rate is 10% per annum and charges are, let's say, 1000 rupees for the entire loan. If I calculate the interest rate, it comes out to be 10,000 rupees. So according to this, interest rate plus charges become 11,000. So according to this, my annual percentage rate will become 11%, where interest rate is 10% or lending rate is 10%. So when you add charges in the list of lending rate or along with the lending rate, that will become annual percentage rate. उसके साथ साथ एक और term है, that is equated periodic installment. I know you might have heard about equated monthly installment, but what is equated periodic installment? So equated periodic installment is an equated or fixed amount of repayment consisting of both principal and interest component to be paid by the borrower on regular intervals to the bank. Now, if the regular interval is month, then it will be termed as EMI. Otherwise, it will be termed as equated periodic installments. So this is how the calculation is done. देखना जरा. If the loan amount sanctioned is 20,000, repayment will be done on monthly basis. What is the interest, sir? EMI, which we have calculated, it is 970 rupees for 24 months, which you have to pay, and all the details have been mentioned over here, which states that 20,000 rupees is the total loan which you have borrowed, but out of 20,000 rupees, 96,400 will be dispersed. 19,600 is dispersed. 400 rupees is deducted. Why 400 rupees is deducted? So it is deducted as a charge. It is deducted as a fees. So technically, you have borrowed a loan of 20,000, but you have received 19,600. Technically, the interest rate on 20,000 is 15%, but actually the interest rate will be charged on 19,600, and accordingly we will obtain the value which we call it as what? So we call it as annual percentage rate. So annual percentage rate comes out to be 17.0%. What is the lending rate? Sir, it is 15%, but annual percentage rate including the charges, it comes out to be 17.07%. Now this is how the distribution is done. Please pay attention. What you will be paying? So you will be paying 970 rupees as an installment. 20,000 is the loan amount. So the moment you paid your first installment, which include 720 rupees as principal, 250 as interest. Then next 729 as principal, 738 as principal, and these are the interest value. As you can see, this is known as reducing loan because principal is decreasing on the payment of, I would say, principal for the next installment calculation decreases on the payment of first installment, because the installment include principal as well as interest. So when you include principal as well as interest, as your EMI, as your return, as your equated periodic return, then in that particular case, your principal reduces for the calculation of next installment. And we call this as reducing loan. We call it as reducing loan. And remember one more point, guys, whenever principal is decreasing, whenever principal decreases for calculating the second installment after repayment of the first installment, this is also known as reducing loan, and these regular repayments are termed as amortization. This is termed as what? So it is termed as amortization. Is it clear now? Is it clear? So these are some of the points which you need to remember. As you can see, what is the amount you are supposed to pay every month? You are supposed to pay 970 rupees every month as repayment of the loan. डन हो गया? डन हो गया? ओके. नाउ अब आपको पता है इतनी देर से जिस पे हम डिस्कशन कर रहे हैं, वी आर टॉकिंग अबाउट दिस पर्टिकुलर पॉइंट फ्रॉम सो लॉन्ग, व्हाट इज द एक्चुअल पॉइंट जो चेंज हुआ है? सो द एक्चुअल पॉइंट विच हैज बीन चेंज, दैट इज क्वालिफाइंग असेट क्राइटेरिया. So what is qualifying asset criteria? It means qualifying asset क्या है पहले वो समझ लेते हैं, then I'll come back and I'll explain you what is qualifying asset criteria. So please pay attention on this. So please pay attention on this. Qualifying asset means loan must meet the following criteria. So loan should be dispersed to a borrower with a household income not exceeding 1,20,000, 1,20,000, 1,25,000 and 2 lakh for rural and urban areas. This was what? This was earlier, which was kept out by the RBI conditions, but now this has been revised to only one, that if your if your household income is 3 lakhs per year, then you will be the part of microfinance. So this has been revised. Loan amount must not increase or must not exceed 75,000 in the first cycle and 1,25,000 in the subsequent cycle. The total indebtedness of the borrower must not exceed 1,25,000. The minimum tenure of 24 months is required for the loan amount exceeding 30,000. Earlier, this criteria was 15,000. If your loan amount is more than 15,000, then your loan period should be more than 24 months. But now it has been changed from 15 to 30,000. Loan must be collateral free without any prepayment penalty. At least 50% of the aggregate loan must be for income generation activity. So whatever loan you are giving, out of which 50% should be used for income generating activities. These should be there should be flexibility in repayment periodicity. You can pay weekly, fortnightly, monthly as per your requirement. Now, here comes the point for which we are discussing this criteria. It says that, please pay attention, it says that for NBFCs, which are microfinance institutes, which are set up with the sole motive that they will be providing loan, majority loan to the microfinance, or they will be lending in the microfinance category only, majority lending will be done. For them, there is a criteria on qualifying asset. So what do you understand by here? Qualifying asset, it basically means lending done to microfinance. Now, lending done to microfinance, they include one condition. First one is household up to 3 lakh rupees per annum income. Loan is collateral free, and rest of the conditions are mentioned over here. So if lending done by microfinance institute, if the lending done by NBFC, microfinance institute, fulfill these conditions, then that lending is termed as qualified, that lending is termed as qualifying assets. And for NBFCs which fall in the category of microfinance institutes or which are termed as microfinance institute, there is a condition. Condition is their qualifying asset. Earlier condition was they should be 85% of the total asset, then it was reduced to 75% of total asset, and now it has been reduced to 60% of total asset. So this is the change. जो qualifying asset criteria का जो qualifying asset criteria था, which was earlier 75% of total assets, now it has been reduced to 60%. So पहले 85 से 75 हुआ and now from 75 it has been reduced to 60%. तो ये इतनी सी न्यूज थी जो मैंने कहा था there is a minute change, but for that minute change I have covered the entire story on microfinance institutes. NBFCs does not qualify as NBFC microfinance institute. So if there is an NBFC but that is not a microfinance institute, for that NBFC your microfinance loan should not exceed 25% of the total assets. So in that case your total loan should not exceed 25% of the total asset. But in case of microfinance institutes, this revision has been done, and this revision has been done from 75% of total asset. Now it says your qualifying asset should not be less than 60% of the total asset. That means it has eased the microfinance institutes कि भैया अगर आपको microfinance loan नहीं कर पा रहे हैं आप पूरे 75% के, don't worry, now you can do it up to 60% of your total asset. बाकी के लोन आप different categories में दे सकते हैं. There is no issue in that. There is no issue with that. Last but not the least is net owned fund. So for NBFCs which fall in the category of microfinance institutes, current net owned fund is 5 crores. That means they should hold 5 crores as net owned fund. 2 crores in northeastern region. By 31st March 2025, 7 crores and 5 crores in northeastern region, and by 31st March 2027, all the microfinance institutes, NBFCs, they must have net owned fund value equal to 10 crores. एक बार चेक कर लो, कोई डाउट है तो पूछ लो, otherwise we'll move ahead. I hope the entire story related to microfinance institute is clear. I hope the entire story related to microfinance institute is clear. And if you have the question is कि वो change क्या था? सर change था कि जो qualifying asset है for microfinance institute, it should be at least 75%, which has now revised from 75 to 60%. ठीक है जी? One more thing guys, if मान लो microfinance institute fails to maintain the qualifying asset for 4 consecutive quarters, then in that particular case microfinance institute will approach to RBI with a remediation plan to taking a view in the matter. तो RBI के पास आप खुद जाएंगे और बताएंगे कि सर ये मेरा प्लान है, आपको क्या लगता है अगर मैं इस प्लान को फॉलो करूंगा तो क्या मेरी जो क्राइटेरियाज है वो फुलफिल हो जाएंगे या नहीं, तो वो आप जाकर वहां देख सकते हैं. तो यहां पे ये जो था, these were the earlier conditions. These were the earlier conditions. We know that the current conditions are household income up to 3 lakhs. तो पहले ये जो क्राइटेरिया था इनकम का रूरल एंड अर्बन के लिए डिफरेंट था. आई हैव गिवन यू दैट क्राइटेरिया एज वेल, बट नाउ देयर इज अ यूनिफॉर्म क्राइटेरिया अप टू 3 lakhs पर ईयर. Done. If it is clear, just give me yes sir so that I can move ahead. If it is clear, just give me yes sir. If you haven't liked the session yet, I would request you quickly hit the like button. Quickly hit the like button so that I can move ahead to the next news. Okay, moving on to the next point. Now the next news is very easy. I'll not take much time of yours. The news says DFCC Bank PLC, which is a Colombo, Sri Lanka based bank, has become the first foreign corporate entity to list green bonds worth 2.5 billion Sri Lankan rupees on National Stock Exchange International Exchange at GIFT City, that is GIFT Gujarat International Finance Tech International Financial Service Center in Gujarat. So what is the news all about? So the news is सीसीसी बैंक पीएलसी ने लिस्ट किए हैं क्या अपने ग्रीन बॉन्ड्स, कहां पर? हमारे इंटरनेशनल स्टॉक एक्सचेंज पर, विच इज सेटअप बाय एनएससी। कहां सेटअप किया गया सर? एट आर इंटरनेशनल फाइनेंशियल सर्विस सेंटर, which is in Gujarat. That is the only point. Next point which is important, so these funds, obviously green bonds है, तो जो पैसा raise होगा, the funds which will be raised, they will be utilized for promoting the green energy. For in that particular case, funds will be utilized to finance solar energy projects which include ground and rooftop installation in Sri Lanka. This will help in reaching the target that Sri Lanka has set a goal. 70% of their electricity will be renewable electricity, or 70% renewable electricity by 2030. That means out of total electricity generated in Sri Lanka, 70% will come from renewable sources by 2030. Sri Lankan green finance taxonomy को follow करेगा, push करेगा ये same initiative. And last is compliances with International Capital Market Association green bond principle will be fulfilled. The next point, the next news we have is World Bank has released its biannual report. We call it as Global Economic Prospects Report. इससे पहले जो रिपोर्ट थी that was out in January 2025. इसके बाद जो रिपोर्ट आएगी that will be out in January 2026 और फिर जून 2026. तो यहां से ये क्लियर हो गया कि बिफोर योर एग्जामिनेशन RBI Grade B एग्जाम, दिस जून 2025 वाली जो रिपोर्ट है दैट इज रियली वेरी इंपॉर्टेंट. वरना आपको पता है मैं जीडीपी ग्रोथ एस्टिमेट्स पे कभी भी आपको कोई भी न्यूज नहीं कवर करता, क्योंकि मुझे पता है कि एग्जामिनेशन से पहले दोबारा चेंज हो जाएगी. बट दिस अपडेट इज गोइंग टू कम नेक्स्ट ईयर आपके एग्जाम के बाद. So this update is very important. So World Bank has released the biannual report titled Global Economic Prospects for June 2025. What are the key highlights? If I talk about the key highlights, so the report has projected India's GDP growth estimates, which says that Indian economy will grow by 6.3% in the current financial year. Earlier estimate in January 2025 was 6.7%. For next financial year, it is expected that Indian economy will grow by 6.5%. In January, it was expected to grow by 6.7%. And for financial year 2028, the expectation is 6.7%. So this basically means 2025-26, 26-27, and 27-28. The projection has been lowered from the previous estimate. 6.7 से कम होकर 6.3 हो गया, but still India is the fastest growing economy among the major economies, or fastest growing major economy, or fastest growing large economy of the world. In India, why the growth has moderated, why the growth rates have decreased, why the growth has moderated, why the estimates have been reduced by World Bank? First reason, sir, it is nothing but it is the reflection. It is nothing but it is the reflection of slowdown in investment on the demand side. Why there is a slowdown in investment? So there is a slowdown in investment because of geopolitical tensions as well as because of tariff war, which has created an uncertainty among the global players, because of which the investment has reduced. The global investment has reduced in India. Second is a deceleration in industrial output growth on the supply side. So because of low inflation rates in the country, inflation rates are low, which means demand is low. And if demand is low, undoubtedly industries, they are trying to decrease their supply, they are trying to decrease the production, which has resulted in overall decrease in GDP growth estimates of the country. Third is the positive side, but I would use a word but. Growth in construction and service sector remains steady. Agriculture output recovered from the earlier severe conditions, and it is supporting the rural areas demand. So these are two positive aspects of Indian economy. These are two negative aspects of Indian economy. Along with this, fiscal consolidation is expected to continue. Fiscal consolidation means where government on one side tries to increase its receipts, when government tries to increase receipts and tries to decrease its expenditure. So the moment government increases its receipts, decrease its expenditure, this will result in decrease in fiscal deficit, and this decrease in fiscal deficit is known as fiscal consolidation. And whenever deficit decreases, debt decreases, therefore debt to GDP ratio also decreases. Are you getting my point? Are you getting my point? What is fiscal consolidation? So fiscal consolidation basically means fiscal consolidation means when government try to increase its receipts by increasing the tax rates and all, or by increasing its tax revenue, and on the other side government is trying to decrease its expenditure so that gap between receipt and expenditure decreases, deficit decreases, debt requirement decreases, which will result in decrease in debt to GDP ratio. So fiscal consolidation is expected to continue in India over the forecast horizon. The growing tax revenue and declining current expenditure projected to contribute to a gradual decline in the debt to GDP ratio. So government is aiming to reduce its debt to GDP ratio to 50%, where the target is set that India's debt to GDP ratio should be 49 to 51% by financial year 2030-31. By financial year 2030-31. By financial year 2030-2031. So India is targeting that our debt to GDP ratio should be in a range 49 to 51%. So what is the current range as per the budget data? Center debt to GDP ratio is estimated at 56.1% for the current financial year. So for the current financial, this is an important data, guys, which you need to remember. Debt to GDP into 100 gives you the percentage. So it is 56.1% for financial year 2025-26. Target is to decrease this. Target is to decrease this in a range 49 to 51% by financial year 2031. Got it, guys? Clear? Last. This is the aspect which I have given you. Just read it once. India के growth rates की क्या हालत है in comparison to South Asian countries. तो बस एक list दे दी मैंने. Just read it so that you can have an idea how the South Asian countries are performing. Last is your global scenario. According to World Bank, the global GDP growth forecast is 2.3%, which was earlier 2.7% for 2025, and it is 2.4%, which was earlier 2.7% for 2026, making a downward revision of 0.4 and 0.3%. Why this has been done? So due to the trade tensions, which has increased because of tariff war, as well as policy uncertainty, again due to geopolitical tensions and tariff war, are expected to drive global growth down. It is expected to drive the global growth down this year to the slowest pace since 2008. So this is going to be the slowest global growth rate since 2008 crisis, where we are expecting that the global growth rate is going to be around 2.3%. In the current scenario, around 70% of the economies, they have cut down their growth rates, and around 60% of the developing economies, they have cut down their growth rates, and India is one of them. World Bank projected that global inflation rate to be around 2.9% in 2025 and 26 before easing to 2.5% in 2027. World Bank has also made certain recommendations कि ये problem मैंने बता दी. World Bank ने कहा these are the problems which I face or which the global economy is facing. These are the solution. First solution is policymakers should concentrate on boosting domestic revenue generation. So policymakers, governments, they should try to boost revenue through the domestic sources, or they should try to boost their domestic revenue by boosting their private consumption without relying on exports to the rest of the world. Second point is directing fiscal spending towards most vulnerable households. Government should spend its funds to support the most vulnerable household, because हम जानते हैं जब भी कभी situation खराब होती है, whenever the things go bad, it impacts the poor first. Poor become more poor, or we can say that poor is becoming more poor and rich is becoming more rich. ये वही condition है. So World Bank has advised that government should support the vulnerable households. Last is reinforcing fiscal policy framework. So government should reinforce their fiscal policy framework in order to support the growth development of the economy without depending more on the global trade, without depending more on the import and exports to the rest of the world. Is this clear? So these are some of the important points which you need to remember related to World Bank report. This report is presented biannual, which means twice in 1 year. First report was presented back in January 5. Now it has been presented in June 2025. I have given you the data for India. What are the reasons that Indian growth rate has moderated? What are the targets set by Indian economy for the future? Then I have also given you the comparison between the South Asian countries, and then I have talked about the global scenarios. So I hope each and every point which I have discussed is crystal clear. Guys, if you want to clear your RBI Grade B examination in the very first attempt, use code MADHAV in order to join our platform. You can subscribe to our platform for 12 months at a very low cost of 7699 by using a code that is MADHAV in order to enjoy maximum discount. Along with that, we have a challenge for you. The challenge is, if you clear your phase 1 exam, even you clear your phase 2 examination, so before you sit in your interview, we will pay back 100% fees. We will make the repayment of 100% fees which you have paid at the time of I would say enrolling our courses. So we offer you 100% cashback once you qualify phase 1 and phase 2, and this offer is valid only and only till 14 June 2025. Use code MADHAV in order to enjoy the maximum discount, and you can download the PDF on my Telegram channel. Now, two big announcements which I asked you that I will be making at the end. The first big announcement is, now from today onwards, I will be sharing the PDF within 1 hour of live session. Second is, as I have asked you to give the feedback in the previous session regarding the revision based questions, so now I won't be discussing the revision based questions, but you will find the revision based questions in the PDF, and you need to share the answers in the comment section. So I will be giving you the PDF. For example, the moment you will download the PDF today, you will find the questions based on the news which we have covered in the previous session, and you need to answer those questions, but you will be submitting the answers of those questions in the comment section. I will be replying the correct answer in the comment section itself. Third is I will be including the descriptive question on regular basis, that what descriptive question can be asked from finance current affairs. I'll give you the question, I'll give you the sample answer as well. Last is handwritten notes for your RBI circulars will be made available after notification. ठीक है जी? These are the decisions which I have taken as per your feedback, your suggestions in the previous video itself. So this is all you are going to receive. Is it fine, guys? I hope you all like it. That will be all. We'll catch you in the next session. Bye bye. Take care. Good luck. God bless you.